Good morning, good afternoon, good evening. It's your boy Gary Scott, aka the Solid Pip Assassin. I'm back with another live educational video with you guys to start off the new year of 2025, January 1st. Appreciate everybody that's been able to get on the live with me right now, and then also the people that's going to be able to tap in when we do post this video. Okay, so right, start the new year. We want to start off fresh. We want to start off new, right? Finding things that works fairly simple for us, right? We want to make it a lot more easier than we do, difficult, of course, right? We want things to be a lot more smooth than it is, than it isn't. So when it comes to the market, it's about finding stuff to make it more simple for you to understand. So that way you're on the right side of things rather than being on the opposite side of things that are not good, right? So, right, I call this method that I'm teaching you guys, right, the power of three, because once you see and study all the structure points of the market, the meaning of everything that happens in the market, it becomes a lot simpler for you, right? Remembering that price has three areas of value that it likes to retest, right? Knowing that price likes to create these things so that price can revisit those areas in the market, whether you're touching those levels moving in an uptrend or whether you're touching those levels moving within a downtrend. All right. But these levels are the magnetized levels of what price loves to come to. Once you understand how these are being used, then you will understand and know that these are where you want to find your entry points from. Okay, because when you find your entry points from these discounted areas or these areas of value that I like to call them, right? We know when price gets to these levels, the two things that we're trying to understand is price structurally moving in an uptrend or is price structurally moving in a downtrend. Once you understand which trend it's moving in, right? Whether it's an uptrend where it creates higher highs and higher lows, right? Or moving in a downtrend where it's creating lower lows and lower highs, right? We want to find out what price is creating whenever it gets to this level, right? When I say creating, I mean what type of candlestick is showing at this level, right? Then taking into account what type of trend are we in? Are we breaking highs or are we breaking lows? Right? That's going to determine the type of candle you want to see at these areas of value. Okay? So if you're moving in an uptrend, when price gets to these areas of value, you want to see candlestick confirmation patterns showing you that price wants to move to the upside because structurally that's what price is also telling you. Okay? Then you have a sideways moving market, right? These markets is the markets we want to stay clear from, right? We do not want to find ourselves trying to trade these markets because you can end up on the bad side of it, right? But finding out what can happen outside of these sideways moving markets or accumulation stages in the market, it's kind of seeing what happens before. Because whatever happens before, it will tend to happen after, right? Not all the time, but a good majority of the time. Okay. So, right, patterns also like to call, they like to create shapes, right? These candle patterns, they like to create shapes at times, right? And these shapes are a form of what we like to even call geometry, right? We've all been taught geometry at some point of our lives, right? Where shapes come into play to help you dictate the direction of what something is actually going. Okay. So when you look at these shapes are very much so significant because, right, they can decipher of which way price is going to head. All right. So this one right here is we like to call the symmetrical triangle, right? Anything can happen out of this, right? You can price can go in an uptrend and be a continuation, or price can transition and continue to move towards the downside for a downtrend. All right. So any of those things can happen when you get to a symmetrical triangle, but to help you decipher what could happen more times than not is looking at what happens before it. All right, because whatever happens before usually is going to what's happened after, right? Not all the time, but a good chance. All right. When these things become 50-50, all right, you kind of got to play it kind of what's going on before. Okay. Then you have your ascending triangle. All right. Price was ascending, right? It could not break above this level of resistance. So what did price do? Price transition, broke towards the downside, and finished this move, right? Then you have where price creates a descending triangle, right? Price was moving in the downwards trend, right? It started to respect this level of support. And what did price do? Price decided to go to the upside. Okay. But then also, guys, if you was on my last session, right? And I also will, like I said, I will post that session as well. That will be available on my YouTube as well. So I want you guys to understand. I showed you guys the teacup pattern, right? You have a bullish teacup and a bearish teacup. If you watch that video, you will see that in the explanation for that, right? But right now, what I also want to, show you another pattern in the market. It's called a what? A ascending channel, right? You have your ascending channels where price is ascending to the upside, but then it's also setting itself up to make a giant fall to the downside. All right. And then vice versa, where you have your descending channel. Now, if it's descending, it's setting itself up for price to take off. All right. Those are what these are called, right? Ascending channel, descending channel. Okay. Now, if you got that, now we're going to find and pay attention to these market shapes, right? You got the market shapes here, and then you got your market patterns here, all right? Where you got your double top. When double tops are being created in an area of value, we want to see price move where? To the downside, all right? Then you have your shoulder, head, shoulder, which gives you your head and shoulders pattern, right? We see these, right? These patterns at the start of a trend and sometimes as continuations within a trend. All right, so this is called your head and shoulders pattern. We want to see price move to the downside. All right, then you have your triple top where a level got touched at the same level 3 times, right? But price could not surpass it, right? We want to see price move to the downside and vice versa. Double bottom, inverted head and shoulders, and triple bottom, right? The complete opposite happens with these, right? We want to see price moving up. They start uptrends, or you can find them as continuations within uptrends. Okay. So we went over that, right? We went over that. I want you guys to take a picture of this, write it down, do whatever you have to do, right? Because then now what I'm finna do is I'm finna break it down in a sense, right? Think about it, right? You got price breaking a structural level high here. It creates a new high. Now, when price creates that new high, it's looking to retest to regain its strength. It comes back to an area of value. And what we want to see is a bullish candlestick coming from this level, right? We want our SLs to be below our area of value, and we're aiming towards the highs. Okay. Price takes out a high, which gives us our break of structure. Price creates that new high. It falls down back to an area of value. This is an order block, right? Or some people like to even call them supply and demand zones, right? You want to find demand zones within an uptrend, and you want to find, right, supply zones within a downtrend, right? Because demand means buy, supply means sell, right? So you have your bullish order block. You want to see a strong bullish candle come from this level with your SLs below your area of value, and you're aiming back towards the highs. All right. It's pretty much the same thing over and over again. If you can if you can visually see the uptrend being created, this is how you properly follow the method. Okay. Creates its new high. It comes back to a structural level in the market, right? We want to see a bullish candle come from this level or a bullish candlestick confirmation pattern, right? With our SLs below our area of value, because we know if price runs through our area of value, it's going to continue to head lower because it was meant to. All right. We see a bullish candle come from this level. We enter the market, right? We're aiming towards the highs, SLs below our area of value. So it'll look something like this, right? Let's say we got our engulfing candle of a bullish engulfing candle or something like that. We place our SL below our area of value, and then we're aiming towards the highs. And as you see, it always gives us a great risk to reward ratio, even in itself. Okay, you're still able to you'll be in position to make more money than you would be in position to even lose money, right? Your risk to reward ratio is always going to be a factor, and it's always going to play itself right because you're only catching these levels, right? You're only catching these entries at these discounted levels. All right, think about it like this: if I was to grab my Fibonacci tool, right, and we put it at the last higher low, then we went to the higher high. You see how price, like I didn't even use the Fibonacci tool when I created this, right? But you see how the Fibonacci tool even aligns with the structural level of the market, right? It came right back within the 50% level, and that 50% level also even plays in a factor at this structural point. All right, so that's like double confirmation. You can have your SLs below your area of value, like I already said, and then you can aim for what? Look at that. It always gives you a great chance to have a great risk reward ratio, and you see how it's always even letting you know where your target point could be. That's if you're using the Fibonacci tool the proper way. Okay, but you see how it even aligns. It aligns with the method in itself. Okay, so delete that, right? Then it's now you're getting your examples from the downtrend, right? Again, it creates a new low. It takes out a structural higher low, right? Price pulls back to an area of value, which happens to be a supply zone or an order block, a bearish order block, depending on what you call it, right? You want to see bearish candle confirmations from this level. Okay. So it'll be something like, okay, let me get my entry off of that bearish candle that closed below my area of value. I have my, I have my SL set above my area of value because I know if it does run past this level, price is going to continue to possibly go back above that point. Okay. We take our entry, and as you see, aiming towards the low always gives you a great 1 to 2 risk to reward ratio, or even sometimes even a 1 to 1. It'll give you a 1 to 6, or even sometimes a 1 to 4. All right. It just based on what's your aiming point, but price is always set to go back towards the low. All right. And you always see it gives you a great risk reward ratio in itself, right? The method in itself always gives you and sets you up for great risk reward ratio. That's how you guys are able to maintain your trading accounts, right? I was on Bobby's live earlier today and I heard him say, right, when you got great risk reward ratio, it saves you. And that couldn't be further from the truth, right? It could not be further from the truth. So finding something and finding a method that works for you that also ties in everything that already is supposed to go for you to be successful in the market, right? Everybody could be able to understand this method, right? Because it's fairly simple. You wait for price to get back to these areas of value. It already ties within risk to reward ratios and how they come into effect, right? And then not only that, but the Fibonacci tool also tends to work perfectly, right? And you guys see this. It always comes back within these deep discounted areas. It came right back down to the 618, right? Price gave you a candlestick that closed below your area of value. You take your entry and then you're aiming towards where? Towards your low, or you can sometimes even go past your low, right? And it always sets you up with a great risk reward ratio. Okay. I use the Fibonacci tool at some point sometimes for confluence to help me dictate, if I'm at a great discounted level as far as my area of value goes. And you always see that it always plays into effect. Like that's my first time ever bringing the Fibonacci tool to this chart thing that I drew down. So you got, to give you guys examples. So you guys see how it even works. And we can go and we can try it, right? And we are going to try it on a real chart. All right. So if that has made sense up until this point, right? Type of PO3 in the chat if that's made sense up to this point. Good, good. So now, right, we explained it, we went over it, right? These are some of the things, and this is what you will always tend to always see within a market, right? So let's go in, right? Let's go just take a look at the market. Like, boom, right here. You see a symmetrical triangle come into play, right? You see how price was moving in the downtrend and it started to work inside of this symmetrical triangle. And then you see what happened with price, right? It ends up breaking above the structural level, right, of this triangle. And then price took off. Okay. We see how what price is moving in a what trend right now. It was moving in a clear cut downtrend, right? We were moving in a downtrend. Price is creating lower lows, right? And lower highs, right? Lower lows, lower highs. So, of course, we're moving in a downtrend. So, we want to see how price is going to react at these areas of value. Now, I get to show you what these areas of value look like in real time. We see how price was taking out this higher low, right? It created a new low. What did price pull back to? Well, what are fair value gaps, Gary? I'm glad you asked, right? Fair value gaps is where you have three candles consecutively after each other, right? But the first and the last candles wicks don't meet within the body of the middle candle, right? So you see how these candles wicks don't meet within the end point of this body, right? Right in the center of the body. That plays as your fair value gap level from wick to wick of those two candles, right? We drag price across, right? Where does it come to? And it plays within, right? Your fair value gap level. So if I see this, right, and I see how price reject off this level, and I see how it gave me my bearish engulfing candle off of it, right? What can I do? I can take my entry the moment that price closes beneath my fair value gap if I wanted to enter here, right? Or I could have waited until my bearish engulfing candle closed, right? It would have gave me a different risk reward ratio, but it'll still play into a fact of being a good one-on-one, right? Sometimes one-on-ones play, they come into play in the market, and that's just sometimes how it's going, situations are going to have to be played sometimes where you're going to have to go for a one-on-one based on sometimes how that candle closes, right? Or if you want to be a little bit more aggressive, if you see that, right, this candle closed beneath, right, beneath my fair value gap, I could have took my entry the moment that that candle closed, and I could have aimed for my lows, right, with my SLs a little bit above my highs. And you guys would have seen that that would have been still a great chance to have, right, a winning trade with a great risk reward ratio. Okay? So boom, that's example number 1. If we go and we see that price took out that low, right? When price goes and takes out a low, it gives us our breakup structure, right? To create its new low for price to retest where, right? For a price to come back to these areas of value that it already created, right? It can do that, but it can also even come back to where, right? Areas of value above that, because this is also an order block in itself. Because the moment that price took out this higher low, right? If we wanted to remove this fair value gap, price could simply be coming to test this order block, right? Well, Gary, how do you know that that's an order block? Well, let me explain it to you, right? This is the last up candle before price moved to the downside to break structure, right? So in itself, that is an area of value, right? That price is going to come back to and either respect or take off above. And in this case, it respected, okay? It respected this level. It closed below once and it closed below twice, right? When it touched it again. So a total of 3 times it respected this level, right? And decided to, right, move towards the downside. So when you see something like this, right, I could have took my entry If I would have seen this, right, I could have simply took my entry the moment that that candle closed, right, with my SL above my area of value, and then I'm looking to aim towards the low. All right, I don't have to have it directly at the low. I can have it a little bit above here. I can have it up here, right, at these certain levels, or I could have aimed a little bit below it, right? But in this case, let's just say we went for a great 1 to 2 risk reward ratio, almost even a 1 to 3, right? We want to aim towards those lows, and we see how price already transpired and handled that situation. All right. Again, what ends up happening? Price gives you the break of structure that you're looking for, right? Gives you your BOS. Again, when price creates those new lows, it's looking to come back to where, right? It's looking to come back to areas of value. This area of value that price came back to, what was what? A fair value gap level. Why don't you look at there, right? Again, fair value gap level is where these candles wicks do not meet within the middle section of this body. Okay? At no point. So when we got the fair value gap and we got a candle that closed beneath it, we take our entry the moment that candle closes and we're aiming towards the low. Right? That's how you attack the market, right? In its simplest form. You want it to come back to these discounted areas, right? And we see we can even pull out the Fibonacci tool from that relative high to this relative low, right? Right here. We see how price comes right back within this what? The 61.8 and that 50% like it did in the example. And then what do you get outside of that? You get a candle closing beneath your fair value gap, right? You take your entry, price moves where you can aim it towards your low, right? You can aim it a little bit below, but you always see how price is going to always attract that negative 0.21, that 0.27, right? It always plays in a factor, right? So even we can go from this relative high right here, right, to this relative low that it created, and we see how price even came back within this order block that also lies within the 0.886, right? And we see how it rejected that level. So you could have easily took price right back down to the 0.27, right? That's how I even tie in my Fibonacci tool to know that it's, the trend is moving in its correct, in its correct direction, right? While getting, these prime entries, right? Some people like to catch wick entries and that's okay, right? But we want to wait for our confirmation, right? And sometimes that may gives a, price may pull down a little bit further than if we want it to, but that gives us the confirmation that price is moving in our direction. Okay? Right? That was the downtrend example, right? We can go and we can take a look at an uptrend example. Like right here, it's perfect. Okay, we see how price creates that new low and then, right, ultimately what ends up happening, right? Price was creating a downtrend, but then price broke this structural high, right? Price never went back below this low. Price broke this structural high, right? Price retest, took off again. So when it broke this structural high, that can give us confirmation to be like, okay, and it also took out this lower high over here, right? We creates the new high. We want to see price retest to an area of value. The area of value again, when price breaks structure, we want to find in this case the last down candle, right? Before price breaks structure. That gives us our order block, right? That gives us our bullish order block or our demand zone. And if you see here, right, from this candle, and this candle, these two wicks don't meet within the body of this candle. That also lies as a what? A fair value gap. You see that? We want to see candles closing above our order block as it did and then you see a candle closing above not only this order block but also this fair value gap, you can take your entry. SL's below that level, and we're shooting right to create new highs. Okay, so it'll look something like this, and you always will see that it always ties in. If I would have seen this candle close above this area, this order block here, I would have entered there, right? Very aggressive, and I would have aimed towards these highs. But you see how it gave me a great risk reward ratio in itself, right? But it also allows my trade to room to breathe. Okay. So we take our entries, we're aiming towards those highs. Price creates new highs, right? When it creates new highs, it's finding areas of value that it can retest to. In this case, right, it retested back to a structural level. We see how we have multiple candles closing above bullish, right? We could take our entries with our area of value right there with our SL below that level, and then we're aiming back towards the highs. And again, we can pull out the Fibonacci tool to show you that, right? It ties in perfectly, higher low, right, to that relative new higher high that it created. If you see how price came right back within the 618 and the 50%, and it continuously closed above, we know the aiming points of where price could potentially head, right? That's 0.27, right? We can then go from there to here, right? From this higher low to this, right? New high. What does price come back to? That's 0.2, that's 0.7, right? And it even hits the 0.786 right on the money, right? And then all we're seeing is price closing above our area of value, right? We see how those levels even ties in with the areas of value. We have our SLs below that level, and then we're aiming towards what? Towards that 0.27, towards the high or to the 0.27, right? And you see how that plays into a factor. Okay. And that's how it works, right? We want to find, right, the correct trend. We want to see how the trend is moving, and we want to see price come back to our areas of value. All right. If that has made sense to you thus far, right? We spent about 30 minutes basically me explaining my entire method in itself, right? To help everybody find a more simpler way of trading the markets, right? If this has made sense to you thus far, again, type of PO3. If you got any questions, right, type of one, and then I'll be able to help you if you do have any questions whatsoever. If you see this video and you have any questions, you can always comment below the video because this will be posted on YouTube. So everybody will have access to, see this live session if they weren't able to get on. All right. So that's pretty much the method, guys. I would just say continuously watch these videos over and over again. I repeat myself a lot because the market repeats itself a lot. All right. It can be boring, right? But sometimes the most boring the most boring things are the very much things that can get us to the next level. All right. Things that are extremely consistent, right? We live in a society where people don't like consistent things, right? They just want it really quick. But you got to move in a consistent pattern so that way you can get certain results. Okay? So that'll end the session today, guys. I appreciate you guys for hopping on. I appreciate you guys for watching. I love you guys. If you guys have any questions whatsoever, you can contact me at my email, which is pipassassin20@gmail.com. PIPASSASSIN20@gmail.com. If you have any questions, um, you can also contact me at my Instagram, which is Gary Scott Official. I'll be on there as well. I do have educational videos on my Instagram as well. You can be able to watch those. They tie in the very thing that I teach you guys here. And then, with that being said, guys, I appreciate you. Um, that'll be all for today's session, and I'll see you guys Friday. Peace.